Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, this is Shiraz Mian with the Zacks Top Stock video. Joining me today is Nina Mishra, our ETF strategist. Nina and I both have stocks from the retail space, which is perhaps timely given the group has been reporting Q2 results lately. My stock, let's start with that, is Dollar General, which is a stock I've long been a fan of, and in fact, discussed it and featured it right here at the beginning of August, just before the stock was headed towards its 52-week high, close to 240. It has lost a fair amount of ground and is currently trading around 225, 226. It reported results last week. It beat on the top and bottom line. The comps were better than expected, and even the guidance were modestly on the positive side. So why was the stock down after the release? The pullback from the 52-week high had started before the quarterly release. So the quarterly release essentially added to the negative momentum in the stock. And my sense is that the pullback is more a sell the news type of development than anything fundamentally new. The most negative aspect of the Q2 release was some tentativeness on the margin front, given issues with rising freight expenses. And as most of you know, rising freight, transportation, payroll, and other inflationary pressures is hardly news at this stage of the economic cycle. So if that is the extent of the negative news in the Dollar General story, then I feel even stronger today than I did about a month ago when I pitched the stock as a long-term investment opportunity for folks who have holding horizons beyond a year. I would add to that today that given the recent sharp pullback, it may be worth a look for tactical short-term type of traders as well. But that is not my focus right now. My focus is and has been long-term investing in Dollar General, and I still am a huge fan of the stock. We have it in our long-term Zacks Focus List portfolio, part of the Zacks Premium product. And I've long seen Dollar General as not only a leader in the broader retail space, but definitely in the dollar space. It has a very clear growth profile looking ahead many, many years. Comps in 2021 have been a bit challenged given the comparisons to last year blockbuster numbers. But there is no doubt in my mind that as we turn the page on 2021, we will get back to 3 to 6% same-store sales growth trajectory, which has been the norm with Dollar General. On top of that, I feel that a number of the management initiatives that have been in place over the past year are not properly reflected in estimates and are not properly evaluated as the discussion around Dollar General takes place. And these initiatives include the greater focus on DG Fresh. That's the more of the consumables item. The technology investments, which is primarily in the visible on the front end side, mostly on the self-checkout, but there's a fair amount of investment at the back end and supply chain. And there's a number of other initiatives which combined, in my judgment, will more than offset the margin squeeze that is the top of the concern for the market right now. But as I mentioned earlier, that doesn't seem to be the driving factor. It's more of a sell the news. It had a very steep run up over the past couple of months, and it's just giving that back, and which, in my judgment, is giving an opportunity for folks who were looking for a quality name in this space, but were a bit hesitant to pull the trigger on Dollar General, given how the stock's rise has been. So all in all, just summing up, a great long-term investment opportunity at a relatively reasonable price. It is one of those stories that combines conservative financial outlook. It has a fortress balance sheet and is returning a fair amount of cash to shareholders through buybacks too, which it incidentally modestly increased in the recent quarterly release, but has a solid growth outlook and combines that with a relatively defensive, counter-cyclical orientation. So all in all, a useful, attractive, and also interesting, I would say, addition to the portfolio to add diversification and some element of uncorrelation relative to the other stocks. With that, I'll pass it on to Nina.
Thanks, Shiraz. That was an interesting pick. And my top pick today is Best Buy, ticker symbol BBY. Best Buy reported excellent results recently, and the stock soared after reporting. And they beat both on the top and bottom lines, very impressive beats, and also raised their guidance for the rest of the year. And both their in-store and online sales recorded very impressive growth. Now, Best Buy for 5 years back was known as Amazon's showroom because people went to Best Buy, took a look, and then bought at Amazon. But over the past 4 or 5 years, they have really improved their merchandise, their marketing, and their in-store shopping experience. And they have also focused a lot on their online channel. And according to Best Buy, more than 70% of the US population lives within 15 minutes of a Best Buy store. And that is why the online shopping channel has been doing very well, because that allows our customers are able to place the orders online. And in most cases, Best Buy matches Amazon's prices too. And then customers can go pick up the item at Best Buy stores. And that worked very well during the pandemic because they had curbside pickup. So with all those measures, Best Buy has been doing very well. And another reason why the outlook looks so rest of the year, Best Buy is rolling out Best Buy Total Tech, which is a membership program, and it will be rolled out nationwide by the end of the next quarter. And they already have a membership program, but the new membership program, which would have certain additional features and perks. Now, the current membership program has been doing very well because this Total Tech provides 24/7 tech support for any of the tech products that people own, irrespective of whether they were bought at Best Buy or somewhere else. Now, in this era of work from home, workers don't have access to corporate IT like they had when they were in the office. So this tech support 24/7 works very well for people who are working from home. Now, let's take a look at some of the charts that look very good in case of Best Buy. So let's go to the code page on Zacks.com. So Best Buy is currently a Zacks rank 2, buy ranked stock. Looking at the style score, very impressive. A for value, A for growth, A for momentum, VGM also A. And the stock is up about almost 19-20% year to date, but it is still trading at a very attractive forward earnings multiple of 12 times, so very attractively priced. For now, it also has a good dividend yield, which is another reason why I like Best Buy. Now, as I mentioned, that they reported excellent results, and after results, you can see the big surprise in the last two quarters, 56%, 54%, and after results, analysts have raised their estimates for the company. You can see that estimates for the current year and next year have gone up significantly after those results. And looking at the longer term price and EPS price consensus and EPS surprise chart, the chart looks great because the company has missed only once during the past 5 years. So definitely a very attractively priced stock with a great outlook and worth a look because of excellent Zacks rank and style score ranks as well. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, our video channel, so that you do not miss anything. And I will see you next week.